What's going on, guys? Welcome back to the channel. My name is Mark and this is Entrepreneurial Finance. Now, with the stock market taking over 30% in the past month, I'm sure a lot of you guys are wondering,
should I be buying this dip?
Well, if there's one thing that I can tell you with my experience is that you need to look at the underlying economic data. Just because the market is down 30% doesn't mean it's justified, but it also doesn't mean it's the bottom. Markets always need a catalyst to appreciate to all-time highs or all-time lows. Just yesterday, we saw the Americans announce that they had 3.3 million Americans file for unemployment. That's the highest ever recorded in 1 week. Previously, the record was held during the 2008 crisis of 700K in 1 week. We hit 3.3 million yesterday, which is an extremely bearish sign in my opinion. Central banks in North America, or all around the world really, continue to maintain an expansionary stance and continue to print money and cut interest rates, which really is good for the economy as it's supposed to stimulate spending as well as business investment. But at the same time, the whole world is quarantined right now, so that's definitely not going to be good for Q2 GDP numbers. So there's no doubt in my mind that this is going to lead to a recession and ultimately a slowdown in economic growth, if not a deceleration in economic growth. At this time, the sell-off might be slightly overblown, but there's really no way to pinpoint it or
call the bottom, if you will.
So even though the market's an extremely dark time, I want to talk about 3 stocks that I believe are truly undervalued right now and might be good to scoop and buy at the prices they're currently trading at. There's 2 ways to take advantage of this. You can either buy and hold for the long term, or you can buy or short sell the volatility of these stocks I'm about to show you, because their VIX or their implied volatility is absolutely off the chart right now. One thing I want to quickly explain before I get into my 3 picks is I'm going to talk about the RSI of each of these stocks, which is the relative strength index. And this is a momentum indicator that looks at the average price changes in a given period. And all 3 of these stocks are severely undersold or slightly undersold in the case of the third one. But just so you know, this is a momentum indicator. Definitely look it up on your free time, or I'll put it up on the screen here for you guys to read. This is just usually something I look at as an entry point or a selling point for a stock. Okay, so the first stock I'm talking about is Norwegian Cruise Lines. They have 2 other peers, Royal Caribbean Cruise Lines and Carnival Cruise Lines. I'm picking Norwegian Cruise Lines because they've lost nearly 70% of their value in the last month. On top of that, their RSI is indicating that it's severely oversold. Most analysts are recommending a buy for the stock, but as you can see, most of them haven't revised their estimates anytime recently. They have the lowest trailing and forward-looking price to earnings ratio of their peer group, but again, they only have 2 other peers, so it's not really telling. They also have the lowest price to sales and the lowest market cap of those 3 companies. The one thing that's important to note is the cruise line is going to take a massive hit this year, okay? No, everybody's quarantined and nobody's going on vacation. There's travel bans worldwide, and that's why this stock has taken a 70% hit. Is this company going into bankruptcy? That's the real question. Are they going to be able to recover? Are they going to have access to the stimulus package announced by the US government? Probably not. I don't see why they would. They're incorporated outside of the US and they subsidize those tax dollars, so I don't see why they would have access to the stimulus package. But anyways, this stock has seen incredible volatility in the past couple weeks. You can take advantage of the volatility, or you can buy and hold this long term. So currently they have $250 million in cash, but they're $7 billion in debt. Again, are they going to be able to recover this? Is $250 million enough to get them through this recession or this quarantine period? I'm sure there's been tons of layoffs, but we don't know at this time if that's enough. Or the statement I want to make though is that if they are able to survive, they're certainly trading below their intrinsic value. Okay, second stock that I want to recommend to you guys is United Airlines. This is a famous stock that is owned by Warren Buffett and his company Berkshire Hathaway. Now, airlines, in my opinion, are an essential service to everyday life, but at the same time, with all these travel bans going on worldwide, it's going to be an ugly year for them. I don't question that. What I'm trying to say is this company's lost 60% of its value, which I believe is certainly below its intrinsic value, but the question is, are they going to be able to survive all these travel bans? How many layoffs are they going to get? And maybe this isn't the bottom of their stock. And they do have access to the stimulus package. That is important. The cruise lines won't have access to the stimulus package, but the airlines are getting access to the subsidies and the stimulus package that the government is providing, which is important. So as I mentioned, all these stocks I'm indicating to you right now have severely low RSIs, relative strength indexes, which indicate that they're oversold. Like Norwegian Cruise Lines, most analysts are recommending a buy for this company. They have about $4.94 billion in cash, but they're about $20 billion in debt. So that's the question again, is $5 billion enough to cover them through this recessionary phase? How long is it going to last? How long are the travel bans going to last? Are we going to be able to get this disease under control? If we are, this stock is certainly oversold and trading below its intrinsic value, in my opinion. So up on the screen here is their competitors table. They have the highest earnings per share. They're in the bottom tier in terms of trailing and forward PE. They have the third largest market capitalization, the highest book value, which means their assets are worth the most. They have a low price to sales, and the second highest EBITDA. So second highest EBITDA with the third largest market cap. Usually in their peer group, when they're higher ranked in EBITDA with a lower market cap, that's usually a good sign because they're able to generate more revenue with less, but they don't pay a dividend. As stock prices continue to fall, this is a company which I believe will be able to recover as they have access to the government stimulus package, and I do believe they are trading below their intrinsic value currently. Okay, let's go ahead and get into the third pick. Okay, the third pick is Twitter, and this is a little bit of a different pick because it's not necessarily affected directly by the current health pandemic going on worldwide, okay? If anything, people are online more now because they're expected to stay home during this crisis. I've always liked Twitter as a potential acquisition target, maybe by Facebook or maybe by Google, but they are kind of that underrated social media company. I know people use it a lot and it is a heavyweight in terms of, social media in general, but I've always liked it as an acquisition target. Will they ever get acquired? They might be too big at this point, but I do like that they're a real-time news service. I do like that they probably won't be affected as much in terms of their revenue by this black swan event known as the coronavirus, which is driving the sell-off in the market currently. Everybody is afraid of what's going to happen. And I think a lot of it's justified, with a lot of people staying home and being quarantined. There's no doubt, economic growth, economic numbers, GDP, all that stuff is going to go down worldwide, as long as people are quarantined. We don't know how long we're going to be inside. And I think as long as we are inside, we're going to see terrible economic data. But at the same time, it was kind of weird. You saw record unemployment numbers in the US yesterday, and the stock market shot up huge. So kind of counterintuitive, but I do believe that a recession is coming, and I do believe the stock market is going to be affected by it. Basically, what am I telling you? I don't think we've hit bottom, but we don't know for sure yet. Now, if you look at the competitors table, it's kind of not telling because a lot of their competitors are diversified. Like you can't directly compare Twitter to, say, Google because their business models are different, even though they're kind of like giants in the tech industry. Now, most analysts are recommending a hold on this stock. Maybe that's because the price didn't fall as far down as some of the other companies I just recommended to you. It's only down 30% year to date, or since the all-time market highs. But this company does have a lower beta, which means it exhibits lower volatility. You're not going to see those huge price movements up 20%, down 20%. Sorry, up 20%, down 20%.
Quarantine, day 15.
But I do believe Twitter is a safer play than United Airlines and Norwegian Cruise Lines. Again, the first two are extremely risky bets. Investing at all right now is extremely risky with the volatility that we're seeing on a day-to-day basis. There's no question that the stock market in the long term is always a good bet, but we are going through times of economic uncertainty, and fear is certainly driving this sell-off. Twitter also doesn't pay a dividend. But those are the three companies, so that wraps it up. We have Norwegian Cruise Lines, you have United Airlines, and you have Twitter. Those are my three recommendations. And again, you can profit by either buying long and holding for a long period of time, or by taking advantage of the volatility in the short term, which is a much riskier play. Okay, so in conclusion, I expect that the economy as well as the stock market to continue to go through turbulent times in these days and weeks of uncertainty. Travel bans and quarantine measures are being issued worldwide, which is going to slow down the world economy. There's no question. It's just about how the stock market is going to react to that. Because realistically, if you're looking at it intuitively, it would crash when you see those type of economic numbers. At a macro level, there's a good chance that this bear market isn't over, but we are seeing a lot of bull traps, where you see down 20% and then back up 30%. You're seeing a lot of this volatility. So the question is, how are you going to take advantage of this volatility? Really, that's up to you. The most important thing to do in times of economic turbulence is to reassess your risk tolerance. How much money are you willing to lose? How much money are you willing to keep? And you should only be investing the money which you are willing to lose, because you don't know whether any stock will be up or down on a given day right now. These companies may be trading below their intrinsic value, but are you willing to lose this money? Because realistically, we're probably not at the end of this bear market just yet. How long are you willing to hold your shares to recoup your losses? It may be a couple years, it may be just a couple months, maybe a couple weeks, maybe it's one day, but realistically, you're probably looking at a couple years to get back to all-time highs, in my opinion. Okay, so Take an in-depth look at these companies I just recommended to you, reassess your risk tolerance, and determine if these companies are a suitable investment for you and your portfolio. Okay, that's the video. I hope you guys enjoyed. If you did, don't forget to smash the like button, subscribe if you aren't already, and share the video with a friend if you learned something, okay? I'll see you guys in the next video. Peace out.